Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, February the 15th, 2024. Very interesting day, to say the least. A lot is going on in our markets, and it continues to really roll around AI. And so that whole new sector, which actually is not totally brand new, but boy, is it picking up some speed, and boy, is it really just rocking a lot of different areas within our markets. I'm going to start here with the S&P 500. And the first thing you're going to notice, I'm here on the 4-hour chart, and let me just kind of open this up. Again, big picture, A, B. I'm still counting all of this as a primary B wave, which should lead to, once it's finished, lead us to a primary C wave decline. But I want to make very clear that I believe that the C wave is going to happen. And what I have seen before in the marketplace is that we run up, we run things to the maximum, and then suddenly something comes in, something causes it, and it's like they pull that piece of wood out of the tower, and it just kind of starts to come down. And it's not really necessarily going to be saying anything about any of these companies. Some of the weaker ones that really don't have anything to stand on will fall by. But the stronger AI companies in this, and how many of our existing corporations, such as Meta, Microsoft, NVIDIA, AMD, AMAT, etc., will survive. But I believe that we have moved too fast, too soon, too fast. And because it holds so much promise that everybody wants to get in, everybody wants a piece, and then they're getting it. And there's a lot to trade. And just before I actually get into the S&P, I just want to show you the super micro computer. Let's just take a look at that. This is the 4-hour chart. I want to show you the daily, or just the hourly chart. This is 742. This was today. This stock now, I'm not sure of this because the Reddit crowd is now into it. There's a lot going on, but also there's options that trade on this. And that's why I say the Reddit crowd. I don't know if they're the ones stepping into the plate, but I know that they're into this. But this particular stock, I can just move it out. Look at this. We're talking about a stock that in 2018 was trading at $20 and reached a high in August of 2023. So this is just last year. It reached a low at 250, a high at 357, pulled back. And then October of 2023 reached that low, and it's just started to take off. And now it is absolutely 100% going parabolic. Parabolic. Now, those that go look it up, folks, parabolic move, what they look like, what does it entail, and what usually will come next. So this is a parabolic. This is a short squeeze or whatever we want to call it, but this is going straight up. Is it over? Up 14% today. 14% today, up $123, which means it was trading below. Here we are. This is the weekly chart. Let's go down to the daily chart and see where it started today. It started today. It opened at 945. The low is 917, 918, and then raced to a high of 1,006. It's incredible. And then it's up an additional $30 after the bell. So, okay, these are some of the stuff that I am witnessing. And then Meta that we're seeing, NVIDIA that undoubtedly is going to now also go through the roof because they report next Wednesday. So, and if they can get this to 1,000, you bet your boot that they're out there buying the 1,000 level calls in NVIDIA for next week. Back over in the S&P. What I have now taken, I'm doing is that I hold what was my alternate and I pulled it back over. Now I tell you, first thing I'm going to tell you is when that happens and I do that and I bring it over, the next day the market will go and just turn around and just go nosedive, which would do nothing more than just maybe put it back to what I was at, which could mean that we're just going to go ahead and start that primary C wave. I somehow don't think so. So what it really would kind of suggest is that, I mean, it could be a one. I say again, let me just open this up. Come down here and go like that. If I were to take this all back and put the 3 down here and the 4 here and the 1 down here and the 2 here, and that this is the 5 and this is 1 and this is 2. And if it turns and comes flying back down, it can't be a part of the 4 because it's gotten up too high. So it would tip and turn and go, and then it would be a 3. And then we have a 4 and a 5, and then we got the bigger one, and we're just off to that other correction, that larger correction. And that may be the case. Now, again, that's also going to be, we get a wave 1, then we get a wave 2, then we get a wave 3, and we get a wave 4. So it's going to come down in 5. And it may happen real quick, and maybe there'll be a catalyst that's going to come out in between. But I'm presenting today, because this has gone high, I put the 4 there. And how it projects now pretty cleanly as a finishing diagonal triangle, a diagonal. So we can connect them up there and we can get these lines going, and it's going to be a diagonal. And we're still right now kind of looking like right here, 51.39 to 51.68-ish. But if it goes full bore, 53.10, 54. Again, you know, when we've got stocks that have the capability of going through the roof. AMAT reported this afternoon, closed at 187, trading at 211 post earnings. So anything chip-wise, anything, and of course the overflow is going to go. I mean, poor Apple can't catch a bid, but I believe that it will, right? Bank of America is the one that really got that extra boost going, and that supercomputer, whatever the one I just showed you, super micro computer. B of A put out a high grade recommendation for the stock, and bam, took off again today. So this is still out there. I still believe there will be a correction. It will not go straight up. We still have more to do, but now it's finishing it. And understand, please go read up on diagonals. A completing diagonal, an ending diagonal. It is racing to pinnacle. And you can't see my hands, but I'm forming a diagonal and just goes straight up because it's going up on a diagonal type of a line. And it's reaching for a pinnacle. And when you can connect your lines and get them going, you're going to see that it likely is going to come out somewhere up in here to here. So I don't discount that it won't get to above 5,162. 167, I mean. I think it will. But that's our first layer of stronger resistance as we move up. And it could complete it. One last thing. I really do believe that, and my comparisons come from being a market maker and being on a trading floor in 2000 when we had the dot-com bust. There was conversations. I remember the television broadcast that people were like, no way, this market's never going to come down. The same things I'm hearing now. Market's never going to come down. AI is never going to let go. AI is here, it's all good, and these things just keep going, keep going, keep going, keep going. And the way they're stepping in to buy it, this is exactly, you believe that statement, right? So, but they do end. And when it does, it is not saying anything about the importance or the longevity of artificial intelligence as it develops and it gets put into practice, it gets put into business. But I believe we will correct. AI will go with the correction, and primarily because we've gotten way ahead of ourselves. And so, and I also believe that it will be a shock. It'll be something coming out of not related necessarily to earnings or a market. It's going to come from the outside. Now, what did we hear today? We heard that Japan is officially in a recession. We heard the UK is officially in recession, which thus thrusts Germany to being the third largest economy in the world. US still being number one. What happens? What happens if we get knocked out of our first number one position? I don't know. So, but you see what I'm saying is I think it comes from outside. That it's not, that it's going to be something different that'll just create this vacuum drop done rally. Because remember, I'm looking for a primary C wave down to complete a cycle degree fourth wave. The last time we had a cycle degree fourth wave bottom was 2009. And from 2009 to 2022 was that rally up. And what at the time I would still call cycle wave 3. Excuse me, cycle wave. Could be cycle wave 3, but cycle wave 5. So, you know, big rally still yet to come. But once we get this correction in place. Now, let's get here to the nuts and bolts of what we're talking about here. So if I think that this fourth wave is done, then we're building up. And again, what we've got is an ABC, 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 ABC. So it looks like what we're finishing or getting ready to finish will be the A wave. And I think the A wave puts us into a new high. So that new high is going to come in above 5,066, which was the high from the 12th. So we're getting to these new highs much quicker. So I think that like we'll break that, and then we have 5,079. That's 0.618 for minute wave 5 of minor wave 5, right? So for minute wave 5, 0.618, not the most common, but there it sits. So maybe that'll just finish the A wave, or it gets a little bit above and finishes the A wave. And then we pull back in a B wave, right? Remember, A, B, C, A, B, C, A, B, C. That's what we have, a lot of 3 waves. So if we're getting here, it's going to come up in an ABC. And it's going to get marked wave A, and then we're going to do an ABC down, going to be marked wave B, and then we're going to do 5 for wave C, and it'll get marked as a C, and then labeled 5, part of the diagonal. And that is where I think this is going to come in. Now, depending on timing, market, what's still left, what could happen, then we have 1.618. First up, 5 equals 1. That's 5167.68. We have minor 5 coming in at 1.618. That's 5159 or 5160. Full bore, 1.618, 5310. Full bore for minor 5, 5441. And then 2.618 for full bore for minute 5, 5500. I have seen calls for 5500. This is how they get them. So they're not that they're invalid, they're just an indication. Doesn't say that that's exactly what's going to happen, but we still have things that are to be reported. We still have market that could run rampant for a while until whatever is going to be the catalyst to knock this thing over happens. In the meantime, it is really difficult to trade because the internals continue to decay. The market internals really are not as strong as you would want or think they should be for these kinds of moves because they're limited to a small part of the market. They're not as broad-based as you thought. Google was down 3, Intel was down today, Microsoft is down today, NVIDIA was down today. Doesn't mean they'll be down tomorrow, but they were down today. All right. So again, it just depends on the day. The Russell continues to see these blasts higher, but it is also reaching levels that have been shown on a fib level. And here we are sitting there. So what comes next? One would think a correction. Now, I'm going to just flip to the daily and let's take a look at our moving averages to see where we are. All of them basically have recovered back again. Now the 8 is now moving again nicely, pointing higher. The 20 is pointing higher. The 50 is pointing, everything pointing higher on the daily chart. So now we've had one very bearish bar being replaced by they're not engulfing, but combined, they've now broken back above. And that's why I moved the count to the alternate. Now they could stop right here and come flying down. And I'll tell you, if it breaks 49.36 and one big flat whoosh, then again, this gets removed back. And then we're going to go with the fact that could. So remember, I'm still running both together, folks. One is not overtaking the other. I'm showing you both because the way the market is trading. I don't want to be talking about, well, as I said, that really we need to wait for it to break back above 5,066. Well, the high today was 5,052. We're there. We're getting very, very close. If it turns and nosedives, which I don't think it will before it makes a new high, because we have Globex, we have Asian market, we have European markets before we get that PPI. So we could make another new high. And for all intents and purposes, put in a 5 if we had to. So again, 5,079, my first stop. 5,070 to 5,000. Wait a minute, let me see what this is. This is, yes, 5,060 to 5,070 is our next zone above all that. And again, I'm looking for an A, a B, and a C to complete 5. And it's looking pretty good. Over in the NASDAQ spent most of the day in the red, catching up towards the end of the day. Here we have it. I've done the same thing where I put wave 1, wave 2, wave 3, wave 4, and we're in wave 5. And why? Because this has actually come up a little bit too high. I'm going to come down and bring this to the hourly chart right away. So once again, just show my internals here, but there's something I want to kind of share with what we got going on right here. This inverse head and shoulders pattern kind of showed up late in the day. All right, so that bar was going into the close. This bar was after the close, AMAT. So even if we had to, neckline, shoulder, shoulder, head. You just draw your neckline, which is here, throw it up over here, and over to the neckline to show where can this go. And it really projects about 18,060, 18,070. We need to get above 121. That's the existing all-time high. Actually, where is it? No, it's not. It's 18,079. So let me go back one more time. I'm pretty sure that is the high. And I thought for some reason that it was higher. No, it's 18,020. No, it is 18,121. Wow, can't even read. My eyes get tired at the end of the day. 18,121 is the high. And so if we come up and the measurement for that inverse head and shoulders is 18,060, 70, then what we're looking for, I can't do it as easy as yours, you can do it on TradingView. TradingView, you can just draw it and move it. Thinkorswim is not quite the same. But again, neckline, You put in your measurement down to from the bottom down up to the neckline, and then you just move it to the top of the neckline, and it's going to show you where that all is. So if we're going from here, let's call it 935 down to 780, that's 20, it's 150, 53 points, 55 points. And if you're putting it up top here, 155 points, you're actually a little bit higher. You're up around 18,080. So it's a little bit higher than I thought, if my numbers are correct. So let's say from 18,060 to 18,080 is where the Head and Shoulders measures out. And that likely would just be completing wave A of minute 5, of minor 5. And minor 5 is forming that ending diagonal. So then we get a B wave, and then we get the C wave, which will take us up. So here as well, where's our targets? So they've been put back on. We've got the minute 5, 618. That would be the minimal. There's the one that's equality, 18,992. 992. So again, the adjustments are made because we got so much higher here when we came down off of that. And you measure it to wave 1 still, even though it overlapped, you do use the same measurement and then it comes out that way. So if we get an A wave, maybe the A wave I'm going to say maybe we get above, or we don't get above 18,121. Maybe we top out there, or we do push right up and through there and get above it, put it in a new high, wave A, do a B wave, and do a C wave, and end up here, or even as high as here. Because don't forget, next Wednesday, we get NVIDIA's earnings. So a lot going on. So we had numbers today that were like, were they good? Were they not good? We went down, we went up, we went sideways, we went everywhere. So that I think is going to continue to be, and it just is depending on where money managers, fund managers, portfolio managers that are getting all this money being piled into the market, where they're putting it. And the various AI groups, the various AI stocks, and anything connected to it. So once again, I don't know. I didn't really take a look at the advanced decline today. I don't think it was that bad, particularly in the broader market. So we're looking at how it's going to be on the New York Stock Exchange to begin with. It was the NASDAQ that had the problems about just getting all over the place. But we are, again, kind of continuing to move a little bit higher, not with any great speed. There's our opening. We're just starting to cruise. And we'll see. We'll see how they get themselves up there. Okay. So that's where I'm going to end up today. I think the moving averages are all still in alignment to continue to propel us. And so I will continue to look tomorrow for upside. And again, I'm going to tell you, I know I've talked about it all the time, I'm a day trader. And I was an option trader, and I do actually have option positions on. I'm now starting to build options positions for what I think comes next. And I'm choosing my instruments, and I'm choosing how I want to do it. But in the meantime, I play what's in front of me. I play the moves that are happening. The NASDAQ has not been the easiest of markets. I'll tell you what has been much cleaner recently is the Russell. The Russell has been a much cleaner instrument to trade. Along S&P's actually been a little bit cleaner as well. But the NASDAQ has been very difficult. Why? Well, because today we had Apple down much more than the 29 cents it's showing. They were down much, much more. They were down over $2 at one point. Google down, Intel down, Microsoft down, NVIDIA down, versus Tesla getting picked up, Meta being picked up, Netflix continuing its roar. So the push-pull. And so it wasn't as easy. If you can hang on to these trades, and you don't mind the risk that can be involved, then you actually made some good money. If you were easier to move in and out of the market, you could make some really good money today. Now, I am going to finish this up right here and leave it to say that tomorrow is an expiration. I'm thinking it's going to be a humdinger. Now, what do we have in terms of economic data? Excuse me. We have at 8:30 a.m. Eastern, housing starts, building permits, and the much anticipated producer price index, the PPI. And then that's it. We have consumer sentiment at 10 a.m. Maybe it'll have an effect. Maybe it won't. I really don't know. But in between, starting at 9:10 a.m. and 12:10 p.m. in the afternoon, we have Fed Vice Chair and we have the San Francisco Fed President out there on the stump. So finishing the week big as we started on Tuesday with CPI, we're going to finish Friday with the PPI. And right now, PPI, core PPI is indicated that it's going to come in lower than last report. And but the producer price index itself will come in higher than the last report. How that all balances out, God only knows. So, but if it's anything going to be like what we saw on Tuesday, we could see a big flip and fall. All right, that's going to be it for today. My intent is to do a big picture update because these are very wild times over the weekend. It is a holiday weekend for all of my folks that are not within the United States. Monday is President's Day here in the US. The markets will be closed. Globex will be trading, but our regular session will be dark. So the next update, so I'm going to try to do the big picture update, whether it comes actually on Saturday or I may get it put up on Monday or any day in between. I will be taking a look at the markets on Monday when Globex opens, just to see how things reopen. And in the meantime, have a great, great trading day tomorrow and have a great long weekend if you're here in the US.